morning, everyone. I want to thank everyone for taking some of your time out of your Tuesday to join Nate Self over at GILICO, as well as myself. My name is Jake here at IAMS. I'm a annuity sales director. Before we get started and I pass the presentation on over to Nate to share more information on GILICO's, we're going to talk more on the accumulation side of them today with the 7.5% bailout rate. We are going to share some information, who we are here at IAMS, and just a quick highlight of why our agents love working with our team. We're going to have a few polls throughout the webinar, so if you do have any questions, don't hesitate to put them into that webinar questions box, and we'll make sure that we get those answered for you today. So the first thing I want to highlight is our commitment to delivering best-in-class customer service. And for all of our agents, one way that we do this is you can reach a live person during our business hours. Our number, it's 800-255-5055. So we're going to strive to answer your phone call with an IAMS employee with 2 rings or less. Moving on, our new producer builders are for those of you who are new to us here at IAMS. And so these bonuses are available based on your production level in your first 180 days of contracting with us. As you can see on this screen, we do have great levels that you can qualify at. And inside each level, there are some great options for you, multiple different production tiers. So if you are a newer agent here at IAMS and like to know where you currently stand or how much you need to get to that next level, don't hesitate to give myself a call. We do have incredible business building tools, personal perks, and even cash rewards inside of each level. If you would like to know like how to get it started, or if you still qualify for any of these levels, just give myself a call, or if you're already here at IAMS, just give your sales director a call. Another business builders program that we offer for all of our agents is our referred producer program. You can see underneath that top red box, the referred producer program. I do see a couple advisors on with us today that have already taken advantage. So our business on the wholesale side of the industry is similar to yours in the field, and one of the best leads that we could ever obtain is a referral from one of our valued producers. So this is why we want to make it worth your while to refer a producer to us. And when you do refer a producer to us and they get contracted, we're going to cut you a $50 thank you check. And then where the real money comes in is as your referral rights business, you're going to receive an override on that business. Our ownership team, it consists of Charles, Steve, Curtis, and Chris. They sign checks for thousands of dollars every quarter. And with that being said, if you can think of anyone that could benefit from doing business with our team, please type their information into that questions box, or you can certainly email me with that information. And then below that, you'll see that red marketing reimbursement tab. This program is our most popular program that we offer here at IAMS for all of our agents. And with that being said, so every $100,000 in FIA premium, you're going to get $100 into your marketing reimbursement account. And then same thing on the life insurance side. And so why this is so popular for our advisors is that we truly do consider this to be your money. You're going to have the flexibility on what services, when and who you use these funds with. So it is your marketing reimbursement. We're not going to tell you what vendors you have to use. We're going to recommend vendors. We do partner with over 35 different marketing programs to leverage you reduced rates and preferred service. We also have our creative team that can help you create a marketing strategy and provide in-house services. So if you'd like to know how much is in your marketing reimbursement account or have a conversation about how to utilize it, you can give myself a call. And I'd love to speak with you about that. So our back office support team is another way that we add value to your business. This is the core of IAMS and how Charles Hearing founded us years ago. It's actually been 40 years now. 1986 is the year that we were founded. So we want to help every independent advisor work smarter and not harder. We are going to do that with our great business building tools and resources. Of course, advanced case design assistance. So life and annuity quotes is an area that we assist with. We're going to get you those illustrations that you request within 24 hours and usually within the hour. So submission to commission support is handled by our new business teams. Mackenzie is the head of the annuity team, and Michelle, she's the head of the life side. So they both have fantastic teams who work every single day to get you a commission quicker. We're going to scrub those applications, submit them on your behalf, and do the administrative tracking, as well as getting you updates on those cases as needed. So we do this to ensure that you get commission mentioned as quickly as possible. This is a service that we provide to all of our valued producers, and how we help you grow your business by keeping you in front of clients, where our team handles that back office support for you. Our IAMS website, also known as our IAMS portal, you can find it at IAMSinc.com. This is a great tool for all of our producers, and just another reason to work with us here at IAMS. Once you are contracted, you're going to have full access to everything that you see on this slide and so much more, again, at IAMSinc.com. If you haven't registered for our website, it's very simple to do so. When we're done with this call, you can go ahead and create an account. We'd love to see you on there. There's a lot of great resources that are available to you, including illustration tools, online forums, product grids, and product news. Industry updates is out there as well. We also have hundreds of sales resources, so we call it our sales resource library. So if you want fact finders, there are even e-fact finders. We have annuity rate watch, and then lots of other sales resources out there. So if you'd like to even do a full portal walkthrough, just give myself a call. I'd be more than happy to set that up with you. Technology is where the industry is going, and Luma, it's our newest partnership to streamline the application process. So most of our carriers are already now on the Luma Firelight e-app platform, such as GILICO. So when you go to one site to submit all of your business, so some carriers are even going to e-app only for some of their product lines, and will also offer extra comp just for utilizing the e-app platform. So make sure you get with your sales director before you submit a paper app, because you could have a good chance at earning more just by doing e-app. We do have a full in-house creative team that we can help you help your practice, and a lot of the items are turnkey and available for you. Many of our sales resources are already white labeled, so you can simply impose your contact information and your business logos onto it. And speaking of logos, agency solutions is an area of expertise for our team. So if you haven't created a full customized brand for you and your agency, we can certainly help out with that. This is going to assist with your name recognition, which grows your natural market organically. And then lastly on this screen, digital marketing solutions is another very popular topic here at IAMS. So we can help you with websites, social media marketing, email marketing, and much more. The internet and social media sites are where the overwhelming majority of prospects go to for information. So just making sure that you're accessible and represented in those marketing lanes is very beneficial to growing your business. So just about every time that you have your first appointment with a prospect that you're trying to create a client, the first thing that they're going to do after that first appointment is go online and vet you, make sure you're a real person. And a lot of them are working with other advisors. So just making sure that you're, again, accessible in those marketing lanes can be very crucial to gaining more sales. So reach out to myself or any other sales director when the webinar concludes, and we can certainly talk to you about how you can access our IAMS Creative so we can get that ball rolling for you. We also offer a complimentary marketing analysis for any agents looking to explore new sales ideas and programs. Whether you're new to the industry or already a seasoned producer, this free assessment can help you boost your business with insights on your website, digital presence, branding, and current marketing activities, as well as recommendations on trusted vendors. Like I said a little bit earlier, we have over 35 different marketing programs that we do partner with to leverage you reduced rates and preferred service. So really in this area, we would love to sit down with you, learn a little bit more about your practice, who you're trying to target, and how you're trying to get in front of them. And then we'll put together a full customized marketing plan, a 90-day plan, so that we can check in either quarterly, monthly, make sure that you're having the right return on investment. And then if we need to change anything up, we can certainly do so. So if you would like to set one of these marketing analyses up, just give myself a call. I'd be more than happy to get that rolling. We founded our IAMS Wealth several years ago, and what we've done is grow this division of IAMS very organically. So we've helped advisors become IARs and pass the Series 65 at a very successful clip. So once you have registered, IAMS Wealth will bring great value to your practice with an incredibly competitive fee structure for both you and your clientele. We have great technology and a great investment platform. So this has been a major growth sector of our business, and AUM could be a major growth sector for your business as well. Going on, we like to do lots of incentive trips here at IAMS. As you can see, this one on the screen, it is with SILAC, and just $2 million of SILAC FIA premium. We'll punch you a ticket for you and a guest out to the Park City, Utah event. So if you would like to know where you qualify or how to qualify, just give myself a call. We do lots of other incentive trips. I think we got about 4 going on right now. So just give myself a call if you'd like to know where you currently stand on any of these trips. Moving on, we like to do Life and Annuity Academy trainings as well. Our next Life and Annuity Academy is going to be held May 13th through the 15th, with registration still open right now. We bring in top producers in the industry to go over their sales skills, really how they became so successful. So it's a great training for any advisors who's already in the field to learn how to incorporate new strategies, just maybe a little bit more effectively into your practice, so you can learn how to grow and scale. And then you also meet our whole team here at IAMS to learn how we can help you grow and scale from an IMO standpoint. So if you'd like to know or just have the registration link for this one coming up in May, you can certainly shoot me an email or give me a call. We'd love to have you out there. Lastly, don't hesitate to follow us on Facebook or LinkedIn. And with this being said, I'm going to pass the slide on over to Nate with GILICO. We have a very long continued relationship with GILICO, and they do have the highest bailout rate. I just want to point out, I know Nate's going to cover it today. So fantastic carrier to work with, great team over at GILICO, always fast responses when doing business with them. And I'd love to run you any quotes once this webinar concludes. So with that being said, I'm going to pass it on over to Nate.
Thank you, Jake. I will go ahead and share my screen here. I think it's going to allow me with this. There we go. Perfect. Sorry for the technical difficulties, everybody. As Jake mentioned, my name's Nate Self. I'm one of our 3 sales directors at GILICO, and I have the pleasure of working with IAMS for the last 4 years. As he mentioned, we have a long-standing relationship. We see eye to eye in what we're supposed to do as a carrier and pride ourselves in service and just providing the best products for our fellow Americans in these uncertain times. So today, what I really want to cover is, why does an index annuity make sense right now, especially with where interest rates are and so on and so forth. Why does the field look towards safety and principal protection and upside compared to what other investment vehicles in the marketplace? So I am a retirement income certified professional. I've been doing this for about 10 years and been with a firm for just over 4 years. A little bit about GILICO. You may not be aware of the name. We are very cognizant about our spend in overhead and advertising. We have been in business for 100 years, but a lot of that growth did not happen until Couvert, our parent company, took over the business in 2016. At that time, we had 500 million in assets, and we're doing about 50 million in premium. Fast forward to last year, we did 2 billion in premium. That's all through our limited IMO group, and we have 11.4 billion in assets. So it's stable capital that they've ingested into the business, and we've grown quite dramatically, over 9x from that time when we were taken over. So we are approved in all states nationwide. We've had the Wealth Choice product out since 2020. That was our national flagship FIA, and we'll continue to be that. We're A- rated with a stable outlook, and we've partnered with Blue Owl Capital to help with some of the asset management side of the business and scaling that as well. Now, where does an FIA help your client? That's really where we're focused in the marketplace, index annuities. There's 5 key areas I think index annuities can help your client. First is, and most utilized, is to provide guaranteed lifetime income. While annuities are really the only tool outside of pensions that can provide that guaranteed lifetime income stream, I think FIAs are the most flexible and provide growth potential on top of the income, and are more versatile than the other vehicles, along with providing principal protection. Second is reduced sequence of withdrawal risk. It ties right into the guaranteed lifetime income. when you take withdrawals in retirement, especially in that first 5 to 10 years, you're more susceptible to withdrawal rate risk. And we'll go through an example of what that looks like and how to explain it to your clients. Using it as a bond alternative. So as we continue to see the yield curve normalize, where you have your shorter end yields come down with the Fed dropping rates 3 times last year, the 10-year has actually been resilient and growing as far as yields are concerned. So when that happens, you're susceptible to interest rate risk if you're in long-term bonds. Index annuities provide a more predictable return than bonds because there is no risk. Your beta is essentially a zero because there is no risk other than if you take an early withdrawal. And then it removes those emotions, biases, and aversions. When you go to bed or over the weekend, you don't know what the market's going to do, and you don't know if you should be taking withdrawals with the S&P down year to date. It's a really great tool to provide that safety, security, and peace of mind that everyone seeks, especially in these geopolitical uncertain times that we find ourselves in 2026. I think annuities are best suited for clients in the retirement risk zone. This is the time period after the saving years, which is 5 years after retirement, and then 5 years right before retirement. Everyone has a different retirement date, but this retirement risk zone is essentially the red zone for those folks that are big football fans, the last 20 yards. This time period is when you're most susceptible to the risks I just mentioned, withdrawal risk, sequence of return risk, and they have a higher impact on the outcome of the client. And this first example is the returns risk. So you have 2 scenarios, and we are using Jake as our friend at Jake is helping sponsor this webinar today. So Jake on the left, he retired, and thankfully the first 11 years of retirement, he had positive returns. On the right-hand side, unfortunately, did nothing differently. They took the average of 3% returns for all 15 years, but we just flip-flopped the order of returns. So as you can see, if you have positive returns early in retirement, that's great. But if you have negative returns early in retirement, that's going to deplete your asset much faster, even though the average of the returns is the same at 3%. So on the right-hand side, it ran out in year 13, whereas on the left, you have almost $53,000 left of your $100,000 while taking a 7.5% withdrawal. And that's simply just because you timed your retirement right. And that's the one thing that you can't control, is you can't control when you retire in an up market, down market, sideways market. And that's why index annuities are so important to guard against this return risk because there's a dramatic impact on the outcome and the amount of income the client can take. Here's another example. This is looking at withdrawals instead of returns. So you have 2 clients, Adam and Bill. They're both invested in the S&P 500 and just a low-cost ETF. Adam retired in 1995 with $500,000. Bill retired in 2000 with $500,000. They both want to take a 5% withdrawal over their next 16 years. And Adam thankfully retired in 1995, right before a bull market, and he was able to take out his full 5% over 16 years and still had $834,000 left over. Now, Bill wasn't too fortunate. He retired January 1st, 2000, right before the dot-com bubble, and in the first 3 years, the S&P 500 dropped 40%. He did nothing differently than Adam, only retired 5 years later, and this had a dramatic impact on the amount of assets he had over 16 years. So after 16 years, he only had 1 more withdrawal left, and he listened to Adam because that's what he saw worked. And unfortunately, just because of timing, that critical retirement risk zone, he ran out of funds in just 17 years. Quite unfortunate. And that's why index annuities are great because it removes that timing risk and sequence of return and withdrawal risk. We're where we are positioned in the marketplace is we want to be able to provide a solution that you can go to, that you can customize for your client. Many of our competing carriers, they design a growth product and they design an income product and they design multiple of each. So you really have to know each individual solution and make sure that it's the right fit for the client. Our Wealth Choice is our bestseller. It's a flexible FIA. It's modified single premium, so you can add funds in the first year, but you can customize it for whatever the client needs. The income rider is completely optional. So whether the client wants that income protection, you can add it at issue. If they don't need it, you don't need to. I always recommend if you're on the fence about providing lifetime income down the road, the income rider is a nice add because you can remove it at any time. And if you remove it, there's no fee on the product. If you do add it, it's just 95 basis points per year. You get the same rates whether you choose the income rider or not. But what are people been using as far as rates? Well, with all the uncertainty and the S&P already being down through the first quarter, people are looking at fixed accounts. And we want to make sure the client has a good option that first year to get them introduced to an index annuity, get them something in line with what's in the marketplace. So 5% fixed rate is what we're offering across the board. The minimum guarantee for life after year one is 2.65%. And we do have a premium bonus option. So the premium bonus is 10%. There's no cost for the bonus other than slightly lower index rates, but the fixed rate the first year is the same. So you can do a 5% fixed and a 10% bonus, provide the client a 15.5% return that first year. Maybe they have losses they need to recover. Maybe you need to refinance an existing annuity or life policy. This is a great way to do that, pairing the fixed account with the bonus. We do have the ability to show the client reallocation. So your friends at IAMS, if you have a scenario where you want to show that fixed account year one or maybe pair it with the bonus, you can do that and then show a plan of attack after the first year. We're one of the few carriers that are able to show a reallocation. So here you have the fixed account, 5%, and then a reallocation into 3 index options after year one, and it will calculate all the returns for you, have a nice chart like you see on the screen, and you can very easily tell the story of here, we're going to make sure we get you a strong return the first year, protect your principal, and then we'll look to reallocate and get more upside with index options. Now, some of the index options that we offer, we're an industry leader in S&P cap rate, the most utilized strategy in the marketplace. We have the number one cap rate in the market right now at 10.5. We also have the number one bailout in the industry at 7.5. So what is a bailout? A bailout is essentially insurance on the renewal rate. So we've had great renewal history over the last 6 years, but we want to be more than that. We want to stand behind our renewal rates. So if the renewal ever hits 7.5% on the 10-year chassis, the client can get out of the policy, surrender MVA free. It's essentially a walk away, additional insurance if renewal rates come down. Now, where could you see renewal rates come down? Well, if you have volatility spike dramatically, like we saw during COVID or last year in March with the tariffs that came out, that dramatically increased the cost of carriers hedging their options. And that's where you could see those renewals potentially come down. That's not our plan. We price the products to hold them the best we can, but this is additional protection shall the client be concerned or you be concerned about renewal rate integrity. And this is automatically built into the contract. Whether you're using the S&P cap rate strategy or not does not matter. The bailout provision is automatically included on all contracts. The rate sheet we have is quite straightforward, and that's on purpose. We have no premium banding. The majority of our strategies are S&P focused, so you don't have to ever apologize to the client on a renewal. Why an index performed the way it did. The S&P 500 is the most known index, of course. So most of our strategies are S&P. You can see you have a cap rate. In that second line, you have the bailout cap. Each one has their own price bailout rate. But on the far right, the 10-year has our highest at 7.5. You have a par rate, a trigger rate, which essentially is just if the index is 0 or positive, you're going to get the trigger rate. There's only 2 outcomes. So great fixed rate alternative strategy there. And then monthly sum, which is our most aggressive strategy on the S&P, where that would do well in a recovering bull market, stable bull market. But again, that is the most aggressive strategy. And then down below, you have 2 indexes that are guaranteed for the term. So the reason those are included on the product, we guarantee those rates regardless of allocation. So if the client goes fixed account the first year and then reallocates to a cap, we're still going to guarantee the Barclays and the dynamic intraday. Because we know the option cost and it's a stable volatility, with our pricing, we can provide guaranteed rates. The one on the far bottom, the intraday, I will definitely want to walk through that one as that was highlighted in the webinar invite. That index is a high vol S&P and cash only strategy, and I'll talk through that in a few slides. But before I do that, I want to make sure everyone's aware of our renewal rate history. This is something that we've built our business on from the ground up. We spend very little on advertising. We rely on our distributors to help us with this. It's extremely important to us that we keep the client at our core. That is our number one priority. The client outcome is our number one priority. So how do we do that? We do that with committing to stability, trust, and accountability in our rates and our rate setting. So you have the 2 guaranteed crediting strategies built into every contract. You have a bailout rate built into every contract, and all of these things come at no cost. You have the actual renewal rates published out on our website. So you have the chart there on the bottom right. And the Wealth Choice was launched in February of 2020. So we have over 6 years of live history. 93.7% of our contracts have not had any change to their rate. 4.2% have a change within 10%, and less than 10%, 2.1% of our contracts have a change outside of 10%. So this is something that's really important to us, and it's how we've built our premium from 50 million to well over 2 billion. Now the intraday, that guaranteed strategy I mentioned, this is a simpler version of most vols that you see in the industry. This is a high 15% target. So the S&P on average is an 18% implied volatility. This index is 15. So you're getting very close to the actual volatility of the all equity index. This has a cash overlay to stabilize the options cost for the carrier. And because of that, we can provide a better cap rate and a guaranteed cap rate to the consumer. Not only is it guaranteed, the client can trade in and out of the strategy throughout their contract and is non-committal. So many of the cap rates that are guaranteed in the market, you do have to elect them up front, especially if they're an all equity index. So here you provide that flexibility depending on what the market dynamics are, what asset classes you believe are going to work. This index you can trade in and out of, which is probably my favorite feature about it. And it's simple design. Just 2 asset classes, S&P futures and cash. So say you really want to show the client a strategy where we go into the fixed account and then year 2 we reallocate, knowing that that rate is guaranteed. You're confident in showing an illustration that's going to show them a rate that is locked in, that cannot change. So here's what that would look like. 5% year 1. Our 7-year has a 13% rate on the intraday. It's locked in, and it over the last 10 years, it would have illustrated at 8.8% with a 13% cap lock. Each month, the S&P Global Carrier Index Partner, they publish a dashboard. This is the dashboard from the end of February, the end of March. Dashboard should be available next week. But it talks about the equity exposure, some of the current events that happened that performed the way it did. I like the transparency of the index and the fact that it's really simple. Just trades between S&P and cash. So here you can see the equity exposures based on volatility, and if volatility is high, it's just going to move a portion into cash and vice versa, with the leverage potential of 200%. The Wealth Choice does have that income rider for folks that want to protect longevity. You just need to elect it at time of application. So some things that are unique about our income rider, the joint payouts are the same as single. So if you are working on a joint income scenario, definitely give us a look. We're the only ones that do not reduce to add a spouse. So if you have two spouses, they do need to be married, whether it's common law or legal marriage. They do need to be married for the joint income. But if they're the same age, it's going to be the exact same payout factor. So at 65, it'd be 6.8%. And the way that we calculate the income is we just take the account value times the payout. So there is no income base on Wealth Choice. It's all the client's true dollars, so it's easier to explain. So you only have an account value and a surrender value, and that's what we base the income off. Everything's contractual once you turn it on. So once you turn on the income, that's going to be their levelized payment for life. If they do want an inflation hedge income, there is an option for increasing, and that just is a 3% compounded increase per year, regardless of market performance. So we do have an increasing option. It is not tied to the market. Everything is contractually guaranteed. That's rather unique for a carrier to have. So if you have a scenario where the client wants some guarantees on increases, we may be a good option for you. Some other places that we could maybe help you, if you want to go through your old book of business, whether you have variable annuities, older fixed and MYGA products, fixed index annuities coming out of surrender or shortly thereafter. Maybe you sold some income riders in a lower interest rate environment. We have been able to help and provide ease of doing business for our IMO partners, having great rates, great payouts, just a simple design and protection on the returns and the renewal rates has been a great exercise for our partners. So I just want to walk through a couple scenarios, case studies, if you will, for maybe some scenarios that you walk into in your day-to-day. So the cap shock client. So this is somebody who's age 63. They're prior to retirement, just a few years, and they have an existing index annuity that they use to protect their retirement assets. Unfortunately, their renewal rate dropped from 8% to 4% over the last 3 years. And the client assumed the cap rates would remain competitive. They didn't know that they would drop or could drop so drastically. Now you're forced to be reactive, defensive, and you're really just wanting to solve the problem. So with GILICO, you can move the product over. You could use a 10% bonus to offset any refinancing costs, and you still have a bailout provision built in. Or you could go a non-bonus version if you're very close to that end of the surrender and there's very little surrender. If it's below 5%, we really don't need a bonus, and you have that protection on the renewal rate. You're solving the problem, giving them a 10% cap and providing them liquidity shall the renewal rate ever hit 7.5. And there's no forced allocation to maintain that bailout. So this is a client that we help rescue to increase their earning potential. The next client is the wait and see market skeptic. I'm sure you have friends and family that are very skeptical about the market right now and have moved a portion of their assets into cash. This particular individual sold a business and they are sitting on a lump sum. Maybe you have a client that just recently sold a house and they're really concerned about the equity market and the volatility that we have and the uncertainty of the war overseas. And they want guarantees now, but they're unwilling to allocate to equities due to timing, and they're afraid of making a poorly timed decision. Really what the conversation should be is you don't have to time the market to participate in it, and you can have downside protection. So in the first year, instead of sitting in a money market account earning 3 to 4%, let's provide them a 5% fixed rate. Reallocate to the S&P, or you could reallocate to the intraday with a guaranteed cap lock, and your timing is controlled. You're not susceptible to what you're reading in the news. The client moves forward without feeling rushed, and this is about being in the market as long as possible and not timing the market with protection. Last case study is you have a client who's age 67 and a wife age 67, near or at retirement in the next year or two, and their primary concern is lifetime income. Our lifetime income rider is primarily utilized in the first few years of retirement, first 2 to 3, especially in that first year. That's where we're priced very competitively, especially on the joint scenarios because of the no reduction. And the clients are frustrated with protecting both lives lowers their income at other carriers. Most carriers will reduce their payout by 50 basis points. You can use IRA dollars, you can use non-qualified dollars. We're going to pay out the same amount if they're the same age. So in this scenario, since they're both like 67, it's going to be the same payout. If one spouse was slightly lower age, we would just base the payout on their age, but no further reduction. And on top of that, we provide them the same great rates that you would have without the income rider. So that's very unique, where you have the ability to replenish those withdrawals with great crediting rates for a legacy death benefit, while protecting their income and providing contractual guarantees as a foundation of their retirement. And I wanted to wrap up with a quick talk about our compensation. This is a brand new program in 2026. This would encompass all index annuity production. This is something that we've done for loyalty from us, the carrier, to you, the agent. For $2 million, it's 25 basis points. So whether you're doing growth FIAs, income FIAs, doesn't matter. You can earn an extra compensation for your loyalty. So 25 bips at 2 million, 50 at 3, 75 at 4, and a full point at 5. We will grandfather you in for next year. So what that means is whatever tier you achieve this year, January 1st next year, you will start out at that same tier you achieved. Our products do issue through the age of 90. So if you have older clients, that may be a place that we could help you as well. But we really just believe in client outcome and providing the best possible product with great pricing. And that's led to our overall success. So with that, Jake, I hope that was a good overview for you and everybody else. And I really appreciate you having me this morning.
Yeah, no, that was a great overview. I don't see any questions in the questions box, which if anyone does have any right now, certainly add those into there. If anyone is working on any cases right now, I'd be more than happy to run you illustrations with GILICO and let you know why it's a fit for your client. They're really great in a lot of scenarios. So really whatever you're working on, don't hesitate to give myself a call. We have a very long continued relationship with Nate and his team over there. So yeah, fantastic carrier to work with. And yeah, no, thanks again, Nate. Thanks for hopping on here and educating our agents just a little bit more on your opportunities with GILICO over there. So if there's any wrap-up comments, I still don't see any questions that came through the questions box, but is there anything additional that you'd like to add on before we get everyone on with their Tuesdays?
I just want to say thank you for anybody that's given trust in us to provide solutions to your clients, that we don't take it lightly. It's really important that you know that we take this as seriously as you do. Same thing to IAMS. This is a partnership, and we take it very, very seriously. We appreciate the opportunity for anybody that hasn't given GILICO a try. We'd love to have a discussion and earn your business on a go-forward basis. So again, Jake, thank you for having me. Have a great rest of your week, and I wish everyone a very happy holiday weekend.
Certainly. Thank you, Nate. Thanks, everyone, for joining, and I hope you have a great rest of your Tuesday. I'll get the recording on over to everyone in attendance today. Thank you.